Hello everyone, welcome to watch the market opening bell on Friday, December 12, your 10-minute guide to the stock market. The Federal Reserve cut interest rates by a quarter point as expected, and the Hong Kong Monetary Authority lowered the base rate for the discount window to 4%. Hong Kong stocks rose first and then fell back. The Hang Seng Index opened 169 points higher, with the gain expanding to 260 points in the early session to reach 25,801 points before retreating. In the afternoon, it once fell 69 points to a low of 25,471 points. The full day closed down 10 points or less than 0.1% at 25,530 points. The Asia Index fell 20 points or 0.2%, closing at 8,934 points. The Hang Seng Tech Index fell 46 points or 0.8%, closing at 5,534 points. The total market turnover for the day was 182.4 billion Hong Kong dollars. Southbound funds net bought $791 million in Hong Kong stocks. Among them, net buys include Meituan, totaling 1.279 billion, Xiaomi 1.009 billion, Ke Holdings 647 million, Agricultural Bank 348 million. Net sales include CNOOC, totaling 517 million, Alibaba 417 million, SMIC 403 million, ZTE 358 million, Hua Hong Semiconductor 257 million, China Construction Bank 196 million, Tencent 115 million. According to statistics, Southbound funds have net bought Xiaomi for 10 consecutive days, totaling 8.4 billion. Net bought Agricultural Bank for 4 consecutive days, totaling 1.34 billion. Net sold SMIC for 3 consecutive days, totaling 972 million. Technically, the Hang Seng Index approached the 10-day moving average at 25,803 points and encountered resistance. This line broke below the 100-day line at 25,855 points on Wednesday, showing a death cross. Plus, yesterday's high open and low close still maintaining a bearish trend. In the short term, it's expected to fluctuate between 25,150 and 25,850 points. The 3 major Asia indexes opened low and closed low. The Shanghai Composite Index lost the 3,900-point level, closing at 3,873 points, down 27 points or 0.1%. The Shenzhen Component Index fell 169 points or 1.3%, closing at 13,147 points. The Chinex Index fell 45 points or 1.4%, closing at 3,163 points. The combined turnover of Shanghai and Shenzhen markets was 1.8543 trillion yuan. The renminbi to US dollar midpoint rate was raised by 67 points daily, reported at 7.0686 to 1 US dollar. Alibaba closed down 1.7% at 150.6 yuan. At $150.6. It is reported that the second-hand price of Quark AI glasses has surged to 5,000 yuan. Official pricing range is between 1,899 and 3,799 yuan, average about 2,800 yuan, with orders delayed to 45 days later. According to Counterpoint Research predictions 225 China AI glasses, full channel sales are about 314,000 units, up 188.5% year over year. As a new entrant, Ali expects Quark AI glasses to account for 10 to 20% of the Chinese market share, considering competitors like Rocket, Meta, Ray-Ban, and Xiaomi. Assuming 15% share, sells about 47,000 units. Some supply chain partners, such as Luxshare Precision, have added production lines targeting capacity release in January to support potential over-expected demand. Calculated with expected sales of 47,000 units, multiplied by average selling price of 2,800 yuan, it can generate about 132 million yuan in sales revenue. Ali's 2026 financial year total revenue is expected to reach 1 trillion, and the expected contribution ratio of Quark AI classes sales revenue to Alibaba's overall revenue is only about 0.013%, a very small proportion. It is reported that ZTE may pay more than $1 billion to the US government, even up to $2 billion or more, to reach a settlement and end years of disputes. The allegations mainly focus on suspected violations of the Foreign Corrupt Practices Act (FCPA) before 2018 in Central and South America, such as Venezuela, Africa, and Asia, through improper benefits to secure telecom contracts. ZTE's stock price fell 13.1%. ZTE announced on the Hong Kong Stock Exchange that the board is aware of recent news media reports on the company's involvement in the U.S. Foreign Corrupt Practices Act compliance investigation. The company is communicating with the U.S. Department of Justice on relevant matters and will resolutely safeguard its rights through legal and other means. The company has always insisted on comprehensively strengthening the compliance system construction and is committed to building an industry-leading compliance system. The company opposes all forms of corruption and has zero tolerance for any individuals who may be involved. The company's current production and operations are all normal. The potential fine of $1 to $2 billion is equivalent to 7.1 to 14.2 billion yuan, accounting for 5 to 10% of ZTE's estimated full-year revenue in 2025 and 134% to 167% of the net profit in the first 9 months. If the full-year net profit maintains 7 to 8 billion yuan, considering Q3 net profit plunged 88%, the fine may wipe out 1 to 2 years of profits or even lead to losses. Although the company's cash flow is stable, the huge expenditure will compress R&D investment, which is about 20% of revenue in 2025, affecting 5G and computing business expansion. Historical reference after the $1.19 billion fine in 2017, ZTE's net profit declined over 30%, showing that similar events amplify financial fluctuations. The market continues to digest the Fed's rate cut decision, with U.S. stocks developing individually. The fear index VIX fell 0.92 points or 5.8%, reported at 14.85. The Dow hit intraday and closing highs, closing up 646 points or 1.3% at 48,704 points. The S&P 500 rose 14 points or 0.2%, closing at 6,901 points, also hitting a closing high with the Dow. Oracle's poor performance dragged down AI stocks, with Nasdaq opening over 100 points lower, closing down 60 points or 0.3% at 23,593 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, fell 6 points or 0.03%, closing at 7,773 points. Oracle's second fiscal quarter revenue increased 14% but missed expectations, plus raised capital expenditures, exacerbating investors' concerns about its debt, with the stock price falling 11%. Other AI stocks were also sold off, with Nvidia falling over 1%. After Adobe announced results, the stock rose 2% against the market. Other large tech stocks also weakened, with Alphabet falling over 2%, Tesla falling 1%. Broadcom announced fourth quarter results, with net profit growing 97% year over year to $8.5 billion, adjusted earnings per share at $1.95. higher than expected $1.86. Revenue up 28% to $18 billion, higher than expected $17.5 billion. Among them, semiconductor solutions business AI chip sales were $11.07 billion, up 22% year-over-year, exceeding expectations. Infrastructure software sales were $6.94 billion, up 26%, also exceeding expectations. Broadcom expects first quarter revenue about $19.1 billion, up 28% year-over-year, higher than previous expectation of $18.3 billion. Among them, AI chip sales will double year-over-year to $8.2 billion, including custom AI chips and chips for AI networks. Its stock rose over 3% in after-hours trading. Disney announced it will invest $1 billion in OpenAI and allow users to use its copyrighted characters on its AI video generation tool, Sora, to create videos. OpenAI launched Sora in September, where users can create short videos by inputting prompts. As part of the new agreement with Disney, Sora users will be able to create using over 200 characters from Disney, Marvel, Pixar, and Star Wars. Starbucks Union said that over 3,800 baristas have joined the strike action so far, with the strike spreading to more than 180 stores in 130 U.S. cities, the longest-lasting strike in the company's history. However, the company says its operations anywhere in the world have not been substantially disrupted and added that once the union is ready, the company will immediately return to the negotiating table. On the economic data side, the number of initial jobless claims for the week ending December 6, seasonally adjusted, increased by 44,000 to 236,000, higher than the market forecast of 220,000. Although the data surged the previous weeks, claims fell to a 3-year low, partly blamed on difficulties in adjusting data during the Thanksgiving holiday. Economists still believe the labor market is in a state of neither firing nor hiring. Our stock pick today is Softcare, stock code 2698. Softcare is a multinational hygiene products company focused on fast-growing emerging markets in Africa, Latin America, Central Asia, and other regions. The company primarily engages in the research and development, manufacturing and sales of baby diapers, baby pants, sanitary pads, and wet wipes for infants and women under several brands, including its core brand Softcare, as well as Vispa, Maya, Cutie, and Clean Clear. The vast majority of the group's revenue is derived from sales to customers in Africa. According to Frost & Sullivan data, in 2024, the group ranked first in Africa in both baby diapers and sanitary pads by sales volume, commanding market shares of 20.3% and 15.6% respectively, while it ranked second by revenue with market shares of 17.2% and 11.9% respectively. The group began localized production of baby diapers, baby pants, sanitary pads, and wet wipes in Ghana in 2018. As of 30 April 2025, it operated 8 production plants and 51 production lines across Africa, with total design annual capacity reaching 6.3 billion pieces of baby diapers, 352 million pieces of baby pull-up baby pants, 2.854 billion pieces of sanitary pads, and 9.303 billion pieces of wet wipes. The group has established an extensive sales network that covers more than 30 countries in Africa, Latin America, and Central Asia, working with over 2,800 wholesalers, distributors, supermarkets, and other retailers. Supported by this broad distribution network, the company has achieved rapid growth. Since 2022, sales volume of baby diapers has grown at a compound annual growth rate of 17.3%, while sanitary pad volume has expanded at 30.6%. Revenue and net profit have recorded equally impressive increases. Revenue rose 28.6% from $319 million in 2022 to $411 million in 2023, and then grew another 10.5% to $454 million in 2024. Net profit surged 251.7% from $18.4 million in 2022 to $64.7 million in 2023, before climbing a further 47% to $95.1 million in 2024. The emerging markets the group serves continue to exhibit strong population growth and consumption upgrading. According to Frost & Sullivan, Africa recorded the highest compound annual growth rate of newborns among all continents at 1.8% from 2020 to 2024, with people under the age of 20 accounting for more than 50% of the population. Penetration of baby and feminine hygiene products in these emerging markets remains low and offers substantial room for further expansion compared with developed markets. In 2024, the penetration rate for baby diapers and baby pants in Africa was only around 20%, well below the 70 to 86% seen in Europe, North America, and China, while the penetration rate for sanitary pads stood at approximately 30%, compared with 86 to 92% in those developed markets. Recommendation: buy at $30.5. Target price $33.5. Stop loss $29. I do not hold the above stock.